Alrighty, what's going on, guys? Welcome back to part two of CRT range or candle range theory. If you have not seen the part one, I recommend you going at the top right corner and please watch video number one. It's important, very, very important. Please do not watch this current video if you have not seen part one. Okay, now if you already seen it, good, you're ready to go. So, let's get started right here. Again, continuation with more examples. Now, something you notice again, it's very, very important. The trend is your friend. I've always said this. The trend is your friend. You see, market is trending up, is creating higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. And again, um, if you look at it right here, let's actually go from the lowest point before the break to the highest point right here. Price pullback. Look at this big drop right here. I want to use the 15 minute in this example, but let's see what's happening right here. We're probably tapping a fair value gap or this order block. Let's see how this look on the daily. Oh, nope. On the daily does not look that good. Let's see 1 hour. Just trying to identify because this example I want to give you here, it's a very quick one, but just understanding that we are trending up, probably went down to manipulate some of these lows. Ideally, guys, you want to see a fair value gap, right? It's my favorite type of thing. Like always, is spotting the market actually reacting to a fair value gap. It's my type of favorite entries. But if you look in here, once the market manipulates this low, takes that liquidity from this relative equal low right there, right? Look at the candle. Already we can see it displays up very, very strong, very nicely. Price was dropping, taking the low. Like it does take the low, but retraces back up. So CRT, right? Let's go here in that candle. So you see these candles as the market is moving down, we're closing below, does not close below. There we go. So we have a potential CRT right here. We have accumulation. This is the potential manipulation candle. And this would be the range, right? This is the candle range. High, right? This is the low and this is the high. Since I'm on the 15-minute time frame, okay, let me bring up the image again here. Hang on. Remember, 15-minute. In this case, I want you guys to jump from the 15-minute to the 1 minute. Okay, in this case, we're going to be using the 15-minute is where you see the manipulation, the accumulation, the manipulation, and then your entry, you have to go to the 1 minute. Go to the 1 minute. When you go to the 1 minute right here, and you see this is the candle range high on a 15-minute, and this is the candle range low, right? We have closed already. The 15-minute candle has closed already. Understand? Remember what I explained on the first video? The candle has closed already. You have to wait. If you want to be conservative, you don't want to be too aggressive. You want to actually wait a little bit more. Wait for that candle to close. Okay, once that candle shows you that we did close, we manipulated the low, we're actually taking that liquidity. We're probably, I don't know, we're probably even respecting, I didn't see it here before, but probably respecting this fair value gap right there. Beautiful, nice. So what am I expecting? Well, that huge pin bar right there is telling me that I'm expecting a reversal. And I want to see if since we're bullish, since we've been breaking, highs after highs after highs, then I want to see if I can target this high, and I'm in discount, right? Using the fib from the lowest point to the highest point right here. I am in discount. I'm getting a manipulation, liquidity taken, a stop in a fair value gap. Perfect. And I'm seeing that candle CRT Perfect. I'll go to the 1 minute. And that candle, this is the thing whenever you're on the 1 minute, right? Is that you have to think fast. Where's the last fair value gap that was created? Right here. Where's going to be your entry? It has to be right there. You have to place your buy limit order in that fair value gap. That's the one you want to be trading. In this particular scenario, that's the one you want to be trading. I'll be cautious right here with the stop. Remember, all of this move, all of this right here, all of this is the week. If I go to the 15 minute, that's the week. You see? That's the week. So I can totally place my stop below this low, right? I know the CRT range is just right here. That's the 15-minute candle, right? It's just right there. But what's the idea here? Besides just trading that CRT range, the idea is probably to go all the way to the top, right? Because now you understand where you spotted that, and you're trying to go with the order flow. You want to try to catch now that potential reversal, okay? So I know that right here, if you yeah, once you are more advanced into this thing, you could probably be placing your stop loss just below that candle and just make your risk to reward just like that. If you want to get in and out right quick, that's your entry, okay? But understand that we do have another fair value gap right here. Price could actually come back and tap that one, so probably place the stop loss right there. All right, but you're still not getting that 1 to 2 R. You probably could aim. I mean, you don't necessarily have to target all just this high. This is just an idea, but you can probably go. All right, let's go for this high, for that liquidity above, right? Not necessarily this has to be your target. You know, if you want to call it a day like that, and you want to put the stop loss just below here, and you want to take it as it is, okay, you can also do it as well. Let's see what happens. Price pulls back, taps, and goes. So did it go? Did it go? Let's say if we wanted to target that high. Nice, right? You see? So you see how important is to where you're going to find that, where you're going to be trading that CRT, where? Because you don't want to be trading it everywhere or anywhere in the charts, in the middle of nowhere. Okay? And of course, if you combine it with your bias, if your bias is bullish, then wait only for a CRT bullish, for a bullish CRT. Because most likely, right here, you're going to be seeing bearish CRT. Like if you look closely right here, there's actually a bearish CRT in here. Would I have taken this sell? If you look at this. If I go to this candle, you see this candle. By the way, manipulation sort of started on the range, so it started ugly right here, to be honest. But we manipulate, retrace back down, thinking it's gonna go to this low. But then you see this actual next candle actually pushes up one more time, so it fails. That CRT failed right there, and then create another CRT. Then this CRT, this candle range would be targeting this low. It did reach to that low price, but then after that, what price did? It did drop. So you see, if if you get caught in the wrong direction and in the wrong time, you're gonna be having fake CRTs, or they're gonna be failing more than they're gonna be winning. So you have to always be aware of that. Okay, don't look just anywhere for a CRT. Okay, let me continue looking for another example. Just right here, right quick. Again, this works in any time frame, in any pair, everywhere. Okay, this should open your eyes. You should definitely open your eyes a lot better now. What are we seeing here? Manipulation of this high. external high, right? External liquidity after this impulse, then I'm expecting price to come back to where? To internal liquidity. What happens after the price taps that? Do you see that little pin bar right there? Do you see that CRT range happening right here? Candle high, candle low. You see how price pushed up nicely after that? You see that model right there? Say price pushes up, pulls back, pushes up, pulls back, pushes up. This cycle, right? We are bullish. We are bullish. Market is pumping up. After the price takes this external liquidity, right? And you use the Fib. Use your Fibonacci. Use your tools, right? If you don't know, probably you could use. You have an idea. Okay, well this is. I want to see price pulling back to 50% discount at least. If not, at least I have my fair value gap right here. Let's see if the market is going to come and take this fair value gap. Let's see. I'm going to mark up the range high. This is a weekly time frame. Look at this. Weekly time frame. High, low. By the way, if you also we had a candle range also at the top. You see the price ended up taking this low. This is what I was saying on the picture that I shared with you before that you can spot. These are the zones. You see another range filter right here on the another candle range, another CRT right there. So you see these are the zones. I explained you on the videos that I posted before this one. I explained that this is the zone that you're gonna be looking for your CRT. This is another CRT right here. Look at this, another CRT here. Every time the price comes to an end, look at this CRT here. Look at this CRT here. Look at this CRT here. Every time the price it has a pivot point, right? It reaches a pivot point where it's going to start reversing or pulling back. It is going to show you some sort of candle pattern. Okay? Make sure, guys, if you have not seen the previous video. Okay? So, hang on. So right here, I have this range. Right? We wait for the next week. Next week, 1, 2, 3, 4, 5. 5 days. There we go. Candle closes like that, right? What do we have? Well, we have a potential reversal. The market has tapped into a weekly. Now I can go from the weekly to the daily, okay? And I'm going to try to find an entry here. This is going to be the CRT weekly high, and this is the CRT weekly low, right? You see the manipulation already happening, tapping this bullish weekly fair value gap. And the idea for me is, hey, I want to enter and target that buy side liquidity, right? I could target the range high, but ideally, I probably want to take the entire swing right there. So let's see if we happen to have something on the daily. You can go lower. You can probably go 4 hour to get a much better entry right there. But let's see if we have something in here. So far, because it's on a daily, I'm not used to trade on a daily like this, but I'm not getting any fair value gap. This is probably going to be gone. Maybe I could find an entry probably on a 4 hour, but let's see anyways. You see price is already going to the range high. It is creating a fair value gap, has created a fair value gap right there, and boom, the movement was so quick, right? On the daily did not give me the range, the type of entry. Let's go 4 hour. See if I can actually go on a 4 hour. Probably on a 4 hour would have been the best. Yep. Let's actually go back. Let's go back to the weekly, and let's close that candle. So right there, let's go from the weekly to the 4 hour. I think it will look better the 4 hour. The daily is probably a little bit too big. So we recently just manipulated this low, right? Let's see if we happen to close above this high. It's gonna be my order block. Let's see. not closing above yet, did close above. So from here, I could already be placing my buy limit, probably here, my stop below here, and my target, as you know, I could be targeting the range or the swing high. Let's see if we get tapped. No, it looks like we did not get tapped. Price was very, very volatile. I could have probably looked for a re-entry in this fair value gap, entering right there. But anyways, it looks like it was gone. But that was a you see that was a big move. That was a clean big move. And it's valid. It was a CRT. However, sometimes it just moves so quick that you may not get the chance to enter. Now, where's the aggressive? The aggressive type of enter, like trader, if you're the aggressive one, then probably you could have taken the entry if you're the aggressive, right? If you're the aggressive, you wait, right? You mark up the range and then you go to the lower time frame, daily or 4 hour, and then you want to wait for the manipulation to happen. Boom, price manipulates. You see, but on the daily, because we're not closing below, the daily probably is not the good one. The 4 hour probably was the best right here. When we close below and then come back into the range, that's the type of aggressive entry, So probably this candle, that candle closing back into the range, the stop loss is going to go below that swing low right there. So again, it's more aggressive. You can get a much better entry, but it's risky because you don't know if that's actually the manipulation candle. That's my point. You know what I mean? So you really don't know if that's the manipulation candle. You want to enter after the manipulation candle closes. Hope it makes sense. Let me see if I can get you another quick example. Look at this little range right here on Nasdaq on a 15-minute. Nice accumulation, by the way. Then we have this impulse, manipulates, and then retraces back down. You see this candle range right here, right there. Let's bring the market towards that candle right there. Once that candle closes, again, you're conservative, and the candle closes below. That's when you're gonna switch to the 1 minute. 15-minute, you're gonna switch to the 1 minute, and on the 1 minute, right here, this is where you are. This is very important because it's on the 1 minute time frame. You have to think fast because otherwise you're gonna be left behind. The market is gonna move quickly. Okay, on the 1 minute time frame, you're scalping. So right there, you are already tapping a fair value gap, a 50% of a fair value gap. I would probably be taking a shot right away because we are already in here. So an entry would look like that if you enter right away. The stop loss, again, if with the experience, you could probably place it above this, also this fair value gap right here, just to be careful. Above the range is always the safest zone. If you don't like that risk to reward, you know, it is what it is. Sometimes you're going to get good risk to reward trades with this. Sometimes it's going to be a lot slower. So let's see what happens. What happened with that one right there? So there we go. All right. Trading basically that range right there. So that candle, how that candle closed, that pin bar after manipulating these highs, it was already telling you. It was predicting pretty much a move to the downside, at least towards this candle range low. In consequence, if you want to target that low of the entire accumulation, it's up to you. Okay. But normally that would be the range. Ideally, that's the range. You can place the stop, as I mentioned, safer right there. You put it a little shorter, but be careful. Sometimes you're going to get some spikes right there. The market can actually get you out. So let me know if you have some questions again about this. Let me know if you want to see a part 3 of CRT range. I want to hear from your comments if you were able to learn something new with these videos. And I will see you then in the next one. Thank you so much, guys.